What's going on, everybody? Hopefully you're doing absolutely wonderful. Come on in. If you're able to chat in the comments, let me know if you're here live with us. I'd love to know where you're from, where you're tapping in from the East Coast, from Central Standard Time, from here on the West Coast, across the world. I would love to hear where you are tuning in from. If you're not able to join us in the chat and you're not able to kind of type on your phone, but you're watching me on some big screen or TV, or maybe you're on the move and you're watching it just virtually, you're not able to interact, that is perfectly fine. I want to welcome you to this live experience. We'll get started in just a moment, and I'll give you the rundown of how we operate here. If this is your first time, maybe somebody has invited you here, maybe you're re-listening and re-watching, and maybe you've been here multiple times, so you know how this goes. We vibe out for a second, get our energy right, get our minds right, get positioned to receive the information that I am putting out there. And in my opinion, maybe the universe for you, maybe it's a God for you, but that God presents to me. And hopefully it just flows and comes out to where you receive it. All right, so let's vibe out for just a second. I'll let people roll in, and we will start in roughly a couple of minutes here. All right. If you don't want to forget the question that you have and you're here live, you're more than welcome to put it down below in the chat. Or if you just want to give me a win that you've had this week in your life, whether it's personal, whether it's financial, whether it's mental, just something that's good that's happened to you. We need good energy. And I think that's the value of having community. That's the value of having this live experience, is because a lot of folks are just trying to do this solo life, right? Just trying to figure out things and stay silent and let me just figure it out. And when I haven't figured it all out, right? I'm a culprit of that. When we have it all figured out, then I'm able to bloom and come out and share everything that I've been doing, right? But we need the small wins. We need the small things. And I think my biggest lesson in life thus far has been that everything, how you do one thing is how you do everything, but then everything is attached to each other, right? So if you're trying to learn a skill set like this trading, or if you're trying to just understand the stock market, but you got other stuff going on in your life, that is hindering you from that, or that you're trying to find a solution for those quote unquote opportunities, as I like to call it, problems, that can be a distraction, right? It can block your mental capacity to be able to receive the information that's being given. So just wanted to throw that out there, that everything matters. Everything matters. And it does not mean it has to be perfect. Doesn't mean everything has to be in alignment. But I've got to say that, because when I hear my clients and individuals say, hey, like I just got a lot going on, I'm like, everyone's got a lot going on. I just need to figure things out first. What do you think I'm doing every day? Right? No one is no different. It's how bad and how willing are you, and to make time for the things that are important. And obviously some priorities come first. I do understand that. So just put that in the back of your mind today, and just understand that everyone has got something going on, right? And everyone has figured some way to get it done. All right. So that's my 2 cents, my message for today. You're writing your chapters of your book each and every day. And how do you want to reread those chapters? Cool. All right. 1 minute and counting. 1 minute and counting. Let's get ready. Get your notebooks, get your charts up, get your listening ears on, get your popcorn, get your food, get your snacks, get your drinks, get your water, go to the bathroom, whatever you got to do. Let's get ready to roll. If you're rewatching, we're about to start in 30 seconds. All right. Cool. We're ready to rock and roll. All right. What's going on, everybody? My name is Dr. B. Welcome to our Stock Sermon Sunday. This is where we give the valuable information for you to be successful in the overall stock market. If you're a beginner, you're welcome here. If you're experienced or intermediate and you just want the levels and the technical analysis, or the TA, maybe you want the fundamentals, what's going on in the world. You got a lot of questions going on in your mind each and every day of how you can not only make money in the markets day in and day out via trading, but also if you have long-term investment portfolios, maybe retirement accounts, maybe you've just got something lingering somewhere. You're like, I don't know what to do with this thing that I have. I'm up. Should I sell? Should I not? Right? And that is where we answer those questions here. Now, disclaimer, we got to say this on a public platform. This is not financial advice. I'm not your direct financial advisor. I think that some financial advisors should personally learn some technical analysis. Just shouting it out. Let's be better people. That 3% return you're getting for your clients, I think it should be a lot more. But hey, that's safety. That's what they get paid for. So consult with your financial advisor if you have one. Consult with yourself. Make your own executive decisions. But here, it's empowering you to be your own investor, your own operator, and to make decisions or have intelligent conversations with people that you want to manage your money, or you manage it, or whatever else it is, right? So that to me is highly important. Just taking ownership of your overall life. And you don't have to have it all figured out, but at least you can, as my dad would always say, if he's listening to this, know a little bit about a lot, right? If you know a little bit about a lot and you become an expert in the space that you desire to be an expert in, then you can have those conversations and you aren't getting swooned and swindled and wondering why people are getting ahead in life and you're not. It's just simply, a lot of times people just don't know, right? Imagine the times where you've matured in life and however far along in life you are, but you've looked back and you said, man, if only I would have known, right? Woulda, coulda, shoulda. Man, if I would have known this back then, I would have. Yeah. So that is why information to me is so valuable. And that's why I try to educate, teach, and deliver information the way that I do, that some of you resonate with. So if it sounds like I'm a little long-winded, every word that I say is intentional. Every word that I say has meaning, whether it's from a life perspective, a mindset perspective, psychology perspective, or it's a direct correlation with how you can be successful in the market. So thank y'all so much for being here. I appreciate you. Some of you already commented down the chat. I've gotten some messages from some of you that are lingering. So that's why I speak holistically, that if you're not in the chat, I know some of you are just watching. So hopefully it's entertaining and educational to you. All right. So here's our rundown for this evening. We spend about 45 minutes to an hour together. If you are here live, the benefit from that is being able to ask questions in the chat. We do have availability to come into our community where we live trade. We give mentorship one-on-one for a 6-week period if you do need additional coaching in this skill set. And we also have our live event coming up. So if you're not yet registered for that and you want to come to Las Vegas, we are a month out officially. So we'd love to have you. People are locking in their spots. People are booking their hotels, getting their flights. A lot of them are using points and miles for that if you want to learn how to leverage that as well. So we'd love to have you here in Las Vegas for our 2-day event. And there's a VIP offer for you to get a breakout session if you're interested in that. If you do play golf, we are having, hey, put your money where your mouth is. If you play golf as well, we do have our community members that play golf. So we are playing golf the day before our event starts in the morning time. So I'm looking forward to having a good time. In Vegas, it should be cool at the end of September. So for those who've never been off the strip, you'll get to experience that. All right. So if you're interested in that, go to brianmcelderry.com, my first and last name, Bryan, and then you can see my last name spelled right there. All right. The links will be all down in the chat. If you have questions, please DM any of those socials right there. If you just need more clarification, or if I didn't know, or is there still availability, we'd love to have you. All right. Cool. A couple more introductions and I will get started. Now, how we do the itinerary here is, number one, we do our fundamental analysis. That is what is going on in the overall market from the news perspective, the earnings perspective, and the economic calendar perspective. So the market is separated into two different, essentially, analyses. How do you analyze the overall market? Fundamentally, and then technically. Technically is the charts, okay? So you might have opinions about what may happen to NVDA. You might have opinions of the market's going bullish, but what do the technicals say? So you have to combine both together. Some people are very technically sound, but they're also not paying attention to the news and the earnings and what the projections are, or what the inflation data is doing, how our national debt is doing, how the war is doing, right? So all those things combined together can give us an edge to the market, right? That is the name of our boot camp, and that is where I came up with that particular name of having an edge in the market. How do you have an edge is by understanding what the big money players are doing and what they're not telling the retail investors. This is not insider trading. This is understanding what they're thinking so you don't get swooned and swindled in the market, right? And once I understood these things, I no longer have an emotional connection to what's happening. The comments that I'll see a lot of times is, NVIDIA had great earnings, why'd they tank? Is because it was probably already priced in, right? Their PE ratio was a little bit too high, so they need to cool off. And then they buy the dip and rip it back up. Kind of like what happened to Palantir, right? The PE ratio, it went up too fast. The price to earnings ratio went up too fast. They needed to cool it off, bring it back to 106, and then rip it right back to 200. And that frustrates a lot of retail investors because they get scared out of their position, not knowing what's going on. All right. Cool. That is the introduction. Thank y'all so much for being here. Let's jump right into it. Thank y'all listening there. If you're re-listening and rewatching, you can always skip ahead to where I'm sharing my screen. Okay. If you have any questions, or if you're enjoying this, please hit me a like. I know some of you like to deliver any type of little gift or whatever here. I think, I've checked that periodically. I'm like, oh, there was a little gift. Thank y'all so much for that. So let's look at the earnings calendar here first, because that's the title of this particular Stock Sermon Sunday. NVIDIA is it might not seem like it because NVIDIA has been chopping around. It's not really moving. It's kind of, people are getting frustrated with NVIDIA, but you've got to understand that NVIDIA has already moved up well above the $1,000 plus mark. It had a stock split, a 10-to-1 stock split, which made the stock price more affordable for newer investors, and then gave the early investors 10 shares for every 1 share that they owned. So when you have stock splits in stocks, they move a little bit differently. Like MU, Micron, technology will probably eventually have a stock split. It's run up so quickly. When it was just at $100 just last year, it's now reached upwards of $1,000, sitting around $800 or so right now. So eventually investors will say, new investors are not willing to pay that $800, $900 price tag, and they will most likely stock split it, bring that price right back down to $100 to $200, and then it will move differently. Okay. So just kind of giving new investors or new people to the market the understanding of where the market's been up until now. All right. So here is our earnings calendar for this week. Again, anyone who's new, because I know I have a lot of people that refer people to come in and listen on Sundays. So I like to make it very beginner friendly. But if you're, Leverage University members, we got to go through this. I'll get directly to our technical analysis, or if you have a direct question you got to run, I'll get to your question and then you can run if you like. All right. This week we have the closing of a month. So we're coming in on the close of August. August has been kind of flat to bullish, right? We recovered very nicely from the dip of July, but we've been chopping around back and forth. And the reason for us chopping around back and forth is because we have the war still going on. We have the Fed still not giving us enough information on rate hikes or pauses. And then we have big tech earnings that are starting to settle in. So this is our final run of the earnings season, which is really finishing off with NVDA. And then we also have AVGO, which will be coming into next week, I do believe. All right. So NVIDIA here will be reporting after the close. We have CRM or Salesforce that will be reporting after the close, which is going to be very, very important because that's on a significant dip and that's getting bought up as of right now. Okay. So, and we've been talking about the software space, buying up those dips if you had the availability to. If you've been doing some long dated call options, that was probably the best sector to start dollar cost averaging in. Meaning, people ask, what's the best deal in the market right now? In my opinion, software was the best deal. CRM, Oracle, ServiceNow, right? Even some of the healthcare companies from last week, Moderna and Merck, right? Just like healthcare was a deal last year with the UNH scandal, right? We were buying and talking about healthcare. So software right now is that kind of opportunistic time as the market's kind of sitting at all-time highs, and that's on a significant dip. All right. CrowdStrike, that's in the cybersecurity space. I always say, and you could probably agree from our long-term investors or traders, that cybersecurity, as more AI comes out, as more technology comes out, we're going to need cybersecurity. So CrowdStrike, ZS, PanW, and various others are going to be very key and why you see in them getting bought up continuously. OKTA kind of moves in the crypto space. Okay. So that's going to be on high alert this week as crypto's been moving pretty well, right? Bouncing from 60 to 62,000 back up close to 80,000. So we'll see how that goes into September. I'll talk a little bit about crypto as well. One key one that I always talk about in the retail space, we just had Walmart. We'll talk about Walmart recovering. And then we have Marvel here. That's going to be a big one. Shout out to Trent. Always trade Marvel there. So Marvel and Iron are going to be other two big ones there. Marvel and Iron on the Thursday close. Okay. Now, when I'm teaching this or educating this, people look at this and it's like, I just want to learn how to trade. But if you want to be in my opinion, understanding of how the market does what it does, like why does this go up? Why does this go down? Why are we heading towards a crash? Why are people talking about X, Y, and Z? Well, the retail space is very important of how the market breadth is, okay? So Walmart tanking or coming down was a signal that the market breadth is still a little bit concerned about the consumer and how they're spending. If the consumer stops spending how they normally spend, then that is a signal, quote unquote, of the consumer scaling back a little bit, okay? So going less and spending on frivolous things at Walmart, going less to Home Depot and saying, hey, I'm going to do that bathroom renovation or living room renovation I was going to do, or real estate investors slowing down on newer projects, right? That is a signal. So why I'm saying this is because we have some more retailers. So Kohl's, Abercrombie and Fitch, Gap, Burlington, Bath and Body Works. Like when I see those stocks, people overlook them because everyone's looking at tech. But I look at all these things because I'm like, ooh, that's in a sector that will decide how the market breadth is, right? So let me know down below if that helps you or you understand that just a little bit, because I think sometimes when people do these trading videos and whatnot, I think there's more to just trading, right? There's more questions that you may have about why this happens and why this is, how can you get ahead of what's coming, right? So I'll pay attention to these specific retailers, Dollar Tree, Dollar General, and that will give me an indication a little bit how they're performing, how their numbers are, and then it will tell a little bit about the consumer, okay? Cool. Any questions, or what questions does anyone have around the earnings calendar? Does that help? Does anyone have any questions around the earnings calendar? All right. Or around why earnings, or why does this even matter? Okay. So when I'm teaching this, I'm scaling into the question that you ultimately have is, what's going to happen with the market this week? How do we make money? Right. That's the question that people want to get right off the bat. Right. And that's scaling into how I make a decision on what the market is potentially going to do and how I can position myself. All right. Cool. Let's jump into the economic calendar. Economic calendar is another piece of that fundamental analysis arm that tells us what the data is doing that will affect the overall market. So we look at the calendar for the week, and we need to know this when we're trading, because when you see those candles going up and then we just drop, or when you see candles going down and we just rip, like what just happened, all right? That was probably because a data report came out that you weren't paying attention to. So on August 23rd, that's this week right here on Monday, we have no events scheduled on Monday. Typically when there's a quote unquote free Monday, FREE, that means nothing's really scheduled. The market can kind of do whatever it wants to do. It can continue higher in that direction. It could chop around, or it can continue lower. So there's really no, as we say, catalyst. So on Monday, tomorrow, I'll be live trading with our community. If you want to join us, the link is down below, or you can go wherever after this on our socials and messages. But when I see a free Monday like this, I'm a little bit more patient, right? I'm not jumping the gun because the market hasn't really decided, doesn't really have a catalyst, right? It's kind of waiting for that NVDA earnings into the middle of the week. You see on Tuesday, we start getting some data, right? Consumer confidence, home sales data, okay? That will give us another market breadth of how those new home sales are doing. We know that a lot of homes are sitting on the market if you've been keeping up to date. We're kind of in this weird time, no buy, no fire, no hire zone with jobs. We're kind of in this, I just want to sit and wait and see if interest rates come down, or, hey, we're just in a renter's market. People just are not, even if they have the money to put on a down payment of a new home, they don't want to. They're not really willing to give up, 5%, 3%, 10%, whatever it is on a new home. They're just like, I'd rather put it in the markets. There's getting better returns. I'd rather hold on to it, to hold on to cash. So the new homes are just kind of sitting, right? So that's going to be pretty important to see how that's doing. On Wednesday, PCE data, that's going to be big on Wednesday, the personal consumption expenditure report. Again, what did we say with retail coming out this week, and from Walmart last week and Target last week? This is important, the PCE data, because it's going to tell us more about the consumer, i.e. us. We control the nature of how the economy is doing, because the economy needs people to spend. Needs people to spend at these retails and go out and shop and go out and, not invest in themselves. I'm not talking about that. I'm talking about retailers, right? I'm not talking about investing into yourself and learning new skills and doing this and that. I'm talking about going and spending frivolously. The economy needs that. So if the consumer is not spending frivolously on things, right, and they're looking for ways to make more money, then that report will give us an idea. Okay. Thursday, weekly jobless claims. That's always important there to see how the job market's doing. Wholesale inventories, retail, yeah, might move the market a little bit. It's going to be really Tuesday into Wednesday. Okay. And then Friday, we got a little bit of data there. The ISM report kind of moves the market a little bit. So not bad. So I really think the biggest thing is going to be that Wednesday with PCE in the morning and NVDA after the close. So what does that mean, Brian? In my opinion, the best days to trade will probably be Wednesday, Thursday. I always say the best day to trade, in my opinion, where you can have clarity is Tuesday through Thursday. Monday and Fridays can be kind of tricky, at least for me personally. My best days are always Tuesday, Wednesday, Thursday. So if I have a good start to the week, as we say in trading, Monday sets the tone, right? If I can just stay green on a Monday, then I'm out. I'm out of the market because I know that I can now get a better read and watch the market all Monday. And then on Tuesday, Wednesday, Thursday, I can, as I like to say, attack the market a little bit better. Okay. Cool. Let's move it along. Move it along. All right, let's go into our technicals. The charts. The question that everyone always has is, I just can't get these daggone charts, man. It just looks like lines all over the place. Okay. So I know I have new people on here. I'm not going to go through a full lesson, but as you always know, if you've been here before, I always give just a refresher. Okay. Just a refresher of how to look at this chart and how would you teach someone in 5 minutes how to read a chart, right? And maybe some of you, I told my community on Thursday, we have a weekly masterclass every Thursday. So if you've ever wondered about joining a community and you're like, I don't have any one-on-one attention, or, you know, where can I learn? Every Thursday, we kind of have, as I like to say, office hours or meet and greet, or you can come in and ask questions from the week. Okay. Do that for about 30, 45 minutes in the evening. All right. So we just went over all those fundamentals. So now I've got an understanding of what's going to happen in the market based off of, okay, the best days to trade are probably Wednesday, Thursday. NVIDIA earnings is after the hours. Okay, cool. The market might chop around to start the week. It's all waiting on what's going to happen with NVIDIA. All right, what's the market doing right now? Okay, so this is the Webull platform. You can use Robinhood, right? For anyone that's new, it's a brokerage. It's a marketplace for where you can buy and sell stocks. It's just like a bank, okay? But it's a brokerage where you buy and sell stocks, like a marketplace, okay? So there's different companies that you can stock trade and buy and sell stocks. You can do it with your national bank that you have. They have a brokerage. So Bank of America has a brokerage, Wells Fargo, JP Morgan Chase, any national bank typically has an investment account that you can open. Okay. That's where you can buy and sell stocks. Now, where I like to trade is a little bit different because I want to be able to maneuver those things a little bit better, right? In my opinion, national brokerages, such as a JP Morgan Chase, long-term investments, things like that, they're a little bit better for longer term investing where you just buy and hold and you set things and forget. My recommendation of where to start if someone was looking to learn how to trade would be number one, Robinhood, because of the simplicity if someone's a beginner. So the link's down below if you need some free shares in Robinhood. But that would be my first recommendation just because it's so easy to conceptualize, right? The second or equal would be Webull, okay? Because when you're trading, you want to have a platform where you can execute fast, back and forth. You want to have the ease of getting in and out of a trade. So if you're in, I've traded on JP Morgan Chase, I've traded on Wells Fargo, I've traded on their platforms, and you know, it's just, it has the availability to trade options on those things like Fidelity and things like that. But in my opinion, it's just not as quick. The third one, if you have it, or if you are, in my opinion, like you've been trading for a little bit longer and you were just exposed to that platform, would be the Charles Schwab Think or Swim platform. Okay. So Webull, Robinhood, Charles Schwab. Those would be, in my opinion, the best places to trade options. Okay. If you have any questions about that, let me know. All right. So I'm on Webull and I'm looking at a chart. Okay. First thing for my beginners out there, just so you don't get lost while I'm teaching this, on the middle of the screen, we have what we call candlesticks. Okay. Each candlestick represents the price movement of whatever I am looking at. So if I'm looking at SPY, the S&P 500, the top 500 stocks in the stock market at the time, QQQ, that is the NASDAQ 100, okay, ETF. So the top 100 primarily tech stocks. So this is more tech focused, okay? You can just buy the entirety of those 100 stocks that are, and there's other things in there, but it's primarily tech focused. IWM is another, as we call it, indice or index, okay? So all those three are the main indexes or ETFs that control the market, okay? So when you've ever heard in the past, like just buy the market, that's what they mean. That's what people that say on the social media platform, just buy the market. And you're like, where do I go to buy it? What do I buy? Right? That's what they mean. Just buy some SPY. So if I go onto the SPY chart, at the bottom of my chart is what we call an interval. So it represents what each candlestick is doing at that time interval. So if I go onto a monthly chart, okay, each candlestick represents what SPY did in that month. On the right-hand side, you see the price of whatever I'm looking at. So in this case, I'm looking at SPY, S&P 500 ETF. Right now, it's sitting at $765. So when people say buy the market and set it and forget it, this is what they mean. So if I go back to 2020, SPY was sitting at $199 during the COVID dip. Okay. So if you would have gone into your brokerage, your investment account, whatever it was for you, your retirement account, and you just said, I have $200 to spare, and you would have just bought SPY in 2020 on the dip, you would be up on that one share that you own 300% on your money. 300% on your money in, what is that, 6 years? So when I'm teaching this, I start from what people typically know, which is I've heard these terms, I've heard this buy the market thing, I've heard the stock market before. Okay, I get that. So you own a share of whatever you're buying. You buy and you hold, okay? And you can sell at any time that you want, right? It's yours, you own it. It's just like real estate, or you buy something and it goes up in value and you're like, I kind of want to sell it, right? So you have control over that. So when I hear, and I'm a culprit of it too, man, everything's so expensive. This is how the wealthy, the people that understand the stock market, the people that understand investing in themselves, skill sets, and up-leveling themselves are getting ahead, is because the assets are increasing in value, right? While the dollar is decreasing. So when someone's making $100,000 right now, it's like, man, this isn't going anywhere. It's because the dollar's decreasing now statistically by 10% every year. So that means $9 last year is worth $10 now. Or excuse me, $10 last year is worth $9 now. So what do you think is going to happen in 2027? Right? The $9 that you have now is going to be worth $8. Because in my opinion, the inflation is just a natural thing. It's evolutionary. Now, do I think we need a reset? Yeah. Some stuff is getting ridiculous. Like, let's be real. Like, the average home price right now, depending on where you live in the country, and I know my Midwest people, I went to pharmacy school in the Midwest. I definitely understand you can get a $200,000 nice family home in rural Missouri. I get that. But in major cities, even in the suburbs, you're talking about 400,000, 350. Or you have to be in a new developmental area that's gentrified and up and coming, and you have to wait it out. And maybe you get a deal for around 300. Right? And then you got to renovate, and you got extra expenses, and then you got property taxes, and then you got this, and you got to furnish it. Like, for the amount that the salary is generating right now and the job market that we're in, it's not sustainable. So when I'm thinking about a reset, I'm like, this is like, I'm not even being um, negative Nancy or saying like, just make more money. Like the average person is not going to be on these lives trying to learn how to skill set. They're just like, I want to do a job. I want to take care of my family. I want to have some kids and I want to have a family home that my family can be safe in. And that's just not attainable for the average person, even in a 2 working household, right? So that's why I believe eventually we need a reset. That means the market needs to cool off drastically to bring these assets down. Now, Brian, well, what's that going to be? I don't know. No one knows unless you're an insider trader, right? Maybe President Trump knows, maybe his friends knows, maybe you got some friends in high places that know, right? But it could be war, right? Because war can be detrimental, but it is bullish, right? Like the Great Depression, right? We could have a situation where we have some kind of health crisis, hopefully not, right? We could have some type of generational rate hikes that happen because the inflation is getting too high and they have to hike rates to bring the inflation rate down. We don't know what it's going to be, but in my opinion, it needs to cool off. And what do I mean by cool off? Okay. From a technical perspective, a correction/crash is 20%. A crash is 20% or more from the most recent highs. So if I drag this down on SPY, I can know where that would potentially be. So I can't time the top. I don't know when it's going to turn. Right now, we are bullish. Bulls strike up, bears claw down. Bullish means going up, bearish coming down. So in that case, on a monthly chart, I can, if you see my scroll at the very bottom here, you see dates, right? You see the 2018, 2019, 2020. You can see my bar scrolling across. So I can go all the way back to 2020, 2019 and see where the market was. I can go all the way back to 2008, right? And I can see how the chart was performing. So this is how hedge funds and myself and our community and investors and traders can see or understand what's going to happen. No one is trying to FOMO people out of positions, but would I rather be prepared for something that's coming, right? And continue to buy dips and ride the market, or would I rather be blind and something like 2008 or COVID situation happens, or we have a bear market and we get that opportunity to buy a dip at a better rate, okay? So let me show you here, okay? So we have expansion from 2020. I want you to look at this, 2020 there. All right, 2020, bam, straight up after 2020. Then we have 2022 bear market and also a midterm year, which we're in right now, okay? Then we have an expansion after 2022. So this is all of 2022. That is a 26% pullback the entirety of the year. All right. That's what someone's talking about when they're saying, when do I buy this market? Ideally, when you get 10% corrections and 20% crashes. Okay. That's when the opportunity typically is. Okay. So let's look at these other dips. Let's look at this dip right here. That's 10% right there. When was that? That was same time as right now, August into end of October. That was a 10% pullback for a month and a half. Okay, cool. They bought that dip. Let's ride it up straight up again. Expansion. Look at this. This was the tariff situation in 2025. It almost felt like COVID again. Same time, ironically, right? Bam, pull back 20%. That's a crash by the market. Okay. So I'm talking from a long-term investor stance now, and then I'll get into the trading, because if you can understand this on a bigger horizon, then when we get into the small micro moves and getting in and out of stuff, it makes a lot more sense. It's called top-down analysis, working your way from broad, macro to micro. All right. What happens? We expand 20% and we go up higher 47%. Okay. Then we pull back again, a little 10%, roughly around 9 there. And then we expand. Okay. So what do you think after an expansion, after a 10% correction might come next? All right. I want you to look at this right here. What did we just say around the same time? October, kind of into, September, kind of into October, midterm year, kind of shaky. We probably have some profit taking. So with that being said, we might go a little bit higher, and I'll draw the candle. Okay. Again, I'm on a monthly candle. That means this candle, that's how SPY moved the entirety of this month of August. Okay. It opened up at 747 and it went as high as 779. All right. So if I draw a pullback from here and just say this is the high, and maybe it's 800, maybe someone says, well, NVIDIA is going to perform well, it's going to pop. Well, if you know NVIDIA very well, what has NVIDIA been doing? It's been popping and dropping. Almost every single earnings, NVIDIA has been popping and dropping. Okay. So if NVIDIA performs well and we run into the end of August and we go to 800 on the S&P 500 SPY, just say it's 800. Well, if I pull a pullback back from there, I'm looking to get the market dip or buy the market or have a pullback correction. You can see at the top of my screen, that little bar. Okay. See that? See the percentage moving? So just say it's 800 and it pulls back. There's 7%. There's 9%. There's 10%. There's 12%. And just say we have some type of 20%. 20% is all the way back down here into the mid 600s. And that's what scares many people, that they're not prepared for. Kind of what happened right here. That is still bullish. Bam. What happens? Market gets bought and we expand. I'm telling people this because we have so many new individuals coming into the marketplace and they're wondering, where do I get positioned? Where do I buy? You can buy whenever, right? But the rule of thumb is by 9-10% pullbacks, by 20% crashes. Okay. Now, from a trading perspective, how do you correlate that to trading? Okay. If we have some type of crash or pullback into the months of September and October, that's when traders will look to get, as we call, longer dated call options. Okay. So a call option is when we think the market's going up. A put option is when the market is coming down. We can make money both ways. Okay. If you're only a long-term investor, which everyone should be, buying shares of stocks, buying dips, buying and holding, you're kind of panicking, or if you are seasoned, you know that the red is opportunity, right? That's a sale. But many people panic when things pull back and it's a bunch of red in the market. It's like, man, maybe I should take some profits, right? Well, we can make money coming down with put options. Okay. I gave a history lesson on options trading recently in our community, telling people that the put option, or the option of puts, right? That was one of the first options that were created by mathematicians, because long-term investors were looking of a way to hedge, right? i.e. protect their long-term investments. Okay. So it was, as we call it, a derivative that was created to protect against their long-term portfolio. They pretty much said, if the market's dropping, how can I protect my long-term investments while it's dropping? Oh, a put option. It can make money coming down. I can protect myself, and then I can sell that put option as a profit, and then I can hold on to my long-term shares. All right. Let me give you an example of that, and then I'll wrap up this little lesson here. Let me know if this has been good thus far with a 5 in the chat, or maybe give me a high five to your friend next door, you give you a head nod. Yeah, they're making sense now, right? And that was roughly in 15 minutes or so or less. That is what gets people excited to understand this, which has been so confusing for so long. Here's Palantir. Palantir was one of the strongest stocks in the year of 2024 into 2025. Okay, you can see here on a monthly chart that if you would have bought Palantir, which many of our community members did, because we called it out less than $10, less than $20 back in 2022, 2023. I have a video on the channel about that. We were buying Palantir down here in 2024, 2023, and it went all the way up to $200. Okay. And what do they tell you in the school of investing? Never sell. Never sell. Just buy and hold. Never sell. Right? Well, you don't have to sell if you don't want to. But you can take some profits, but you could have bought a put option at the top of the market when you said, yeah, I don't want to sell my shares, but I'd also want to make some money and protect myself as it's coming down. So if you would have bought a put option up here at the top, you would have made money coming down, sold the put option, protected your long-term shares, and then bought more here. Because what most people do is they buy at the highs if they're chasing, and then it pulls back and they say, man, I bought too high, and then panic sell, and then it rips back up, right? Because you bought when everyone was taking profit. Okay. So that's just a prime example of how we use long-term investing, meaning buy and hold shares, you own those, and trading more specifically with options. Okay. Cool. 5. We're good. All right. I'm gonna speed it up now since I've got everyone that maybe is beginner on the same page. So let's speed it up now and let's talk to my community members and anyone that is going to be trading with us live this week. So on SPY, we talk about candle structure, candle location. So I'm on a monthly chart because the month is about to end. I'm looking at this candle right here on a monthly. That monthly candle tells us something. A top wick on the monthly candle or on any candle tells us that profit taking is happening and sellers are potentially present. If we have a long bottom wick on a candle, that tells us that buyers are present and sellers are getting bought out of their position. Okay. So this candle, for example, used to be a solid red candle because some people haven't seen candles move. All right. This candle right here that's red used to be solid red and it went down here and then got bought back up and finished there. So because that candle finished with a long bottom wick on the candle, that tells me that, okay, buyers are there. That's support where buyers are present. It's probably going higher the next month or so. Okay. This candle right here tells me a different story, that we have no bottom wick on the candle. We're still bullish, meaning we're going higher here and we're trying to create new higher highs there. Okay. But because this has a top wick on it, I'm a little bit more cautious that we're getting close to a temporary top. Okay. Because of how this candle is finishing. All right. Because what can happen, and those of you that have seen candles move, obviously in the market, we can open up the month of September and that candle flips and we start coming down and there's that reversal. All right. And then there's our pullback that we wanted. All right. You can kind of see a little bit of the same structure right here. So that's the cool thing about the charts, which is why I say the charts are where the money is. Because if you can start reading the charts, you can get ahead of potentially what's coming. Look right here, back in November of last year, we got a big buy up here on that candle, big red buy up. We kind of slowly grinded higher for a couple of months and then bam, pull back. All right. Let's look at another example. Look right here. Back in beginning of the year of 2024 going into 2025. Look right there. We started to get some top wicks on these monthly candles. It starts to be a little bit more equal here, not a big bottom wick like this one here. And then we start slowing down, as we call it, slowing down the price action, It's getting exhausted. Buyers are saying, hey, I don't really want to buy these highs anymore. And that's what these candles are telling us. Guess what came the following months? Bam, 20% crash. Okay. So if you can start reading the charts a little bit better of the candle structure and where it's located, you can kind of see what's happening. So when I'm telling my community, hey, I think we're getting a little bit close. Let's still trade the trend that we're in, which is up. But I think we're getting a little bit close, and I do not want anyone to get faked out. Just be a little bit cautious into these highs. Okay. Let's give another example over here. Okay. Here was a little bit clearer one when we went into that bear market. You see, we started to get a little bit more drastic red candles, a little bit more solid there. And then we got a pretty decent candle there. You see how that candle produced higher, but then what came the following months and a whole year of correction. All right. So that's what I'm looking at when I'm seeing candles that look somewhat like this. All right. Cool. Very little bottom wick. We got a little bit of continuation. We got some top wick action here. And NVIDIA is kind of that telltale, kind of their last like line of defense. Hey, if NVIDIA performs well and it pops higher, okay, we're probably going to 800 on SPY. If NVIDIA cannot perform like they need to and it pulls back, the market's pulling back going into September. Okay. Good there. So if I understand that monthly chart, then I come into my shorter time frames and I can get a better idea of what's happening. You see, I just have more candlesticks. So I can analyze the daily chart, the hourly chart, and then when we trade, typically we're on 15 minutes, 2 minutes, and 5 minutes. But by the time I get on these lower time frames, I have that bigger thesis in mind. Okay. So let's go on the daily. Okay. We have a structure here of consolidation. Consolidation just simply means chop. It's preparing for the next move and it's back and forth. Okay. So I'm on daily chart. It's going back, forth, back, forth, back, forth, back, forth all summer. All right. Hedge funds were on vacation. We come back off vacation and we break out. Okay. But we need to retest where we broke out. Brian, why do we need to retest where we broke out? It's because I use the analogy of home building. If you're building a home and you build the second floor or you build the third floor and you don't stand on that second floor to see if the foundation is solid and you fall through it, then you need to go all the way back down to ground zero. Okay. So when we break into a new level, remember this was resistance, a ceiling, could not get above where? 758.33. Bam, lower, bam, lower, bam, lower. We finally did what? Break out. So now since we're broken out into a new high and a new level, what's happening now? Trying to see if we can stand on that level that we broke out of. Right? And if we can, we watch those candlesticks to see if buyers step in. Well, Brian, how do you know that buyers step in? That's the benefit of being in live trading and watching us trade or watching your candlesticks because the market, the candlesticks are moving. Okay. So if I see it come down here and we get a big candle straight up like that, I'm like, ooh, okay. Buyers are present there. All right. So if I see a candle pop off of there like that and I see a green candle starting to form, then okay, buyers are present. They just bought up and they're like, hey, we can stand on that. Continue higher. See the visual? Well, Brian, what if we can't stand on it? What if NVIDIA does not perform? Well, this was a, as we call, liquidity grab fake out. We broke out, everyone chases it, and then NVIDIA does not perform. You got to be prepared for both sides. So right now we are bullish until otherwise, meaning we're going higher until otherwise. But I've got to be prepared if NVIDIA doesn't perform and we break underneath that SPY like that, and we get a candle like that. Well, now you see how I drew this as green as support? Now it becomes resistance again. right? Because we're back underneath that level. And you see the possibilities. We can go all the way back down here, all the way back down here. And then we start that pullback and everyone's like, what's going on? Watch the charts. Okay. So guess what we'll be doing? We'll be making money either way because we're watching the charts. Okay. Cool. All right. So let me go into an even lower time frame here on SPY. And let's look at some, as we call, moving averages, because those moving averages, you see, I just turned them on here. I have a charting video on the channel. Those moving averages tell us what, if we are bullish direction, if we're above the moving averages, or if we fell underneath them, we're back a little bit more bearish, meaning coming down. All right. So as you can see, these moving averages that I turned on, the daily 20 moving average right there, I teach it like a wave, right? Like if you're a surfer, if you ever tried to surf, or you're like, Brian, I don't mess with no water or surf or none of that stuff. Just envision yourself surfing, okay? You know, like one of the video games, you're surfing on the top of the wave. As long as you hold above the waves, you can continue higher. If you crash underneath the wave, you're going to start submerging underneath. Okay. So if you see here, we're holding above all the waves of the moving average. Okay. Right there, you can see it's holding above this one. We can continue higher. It's holding above this one. We can continue higher. If we start failing underneath these waves, well, where's the wave? 760 right now. And then this one's at 752, roughly 750. So 750, in my opinion, is kind of that pivot point. We can stay bullish as long as we're above 750 on SPY. We fail underneath 750, that's when the floodgates open up just a little bit and we start coming back down. All right, cool. So because I have those moving averages marked there, when I come into my lower time frames, I'll even name it here. So when I come in, I can see it, daily 20 MA there. You can see it pops up on my chart. If I come into the hourly chart, that's 762. Okay. We get down into 760, 762, and we hold that, then we can go higher. Your mark this week, if we break above 770, then we can go higher. Okay. So for my short-term traders, my community members that need micro levels, meaning pinpoint levels, this is where we get, as we call it, granular. Okay. So I'll mark these levels like this there. That is resistance right there. So here's my channel. Okay. Here's my trading channel for this week for right now. 762 to 770 on SPY. Okay. We can get back above 771. That's when that bull flag and that reversal comes and we go all the way back up to new all-time highs. Okay. So respect this level here of 770. And we're just chopping in this channel for right now. So we got about a $7 to $8 channel. Okay. Brian, how'd you know that was a channel? Because look what happened. Do you see right here? This used to be support. Bam. Above 770 went higher. Bam. Above 770 went higher. Well, look at there. Then we fell back underneath. We could not hold that floor, that support. So now it's going to turn back into resistance. Okay, because we failed underneath it. You can see right here, there. All right. That's not ironic of why it failed underneath there, lower, because we could not hold that level. Okay. So that level is going to be pretty big this week that we can try to go back up into and try to break out and go higher. And that's going to be all indicative of NVIDIA earnings, PCE, all that kind of stuff. Okay. So bullish until otherwise. I think we're in support. I think we get a reversal. We're right into our daily 20 holding above. If we break above that level, then we'll probably trend back upwards. So I think we can see some calls into NVIDIA earnings or some upward momentum at the beginning of the week. Okay. All right. QQQ. If I look at the daily candle on QQQ here, you can see that is a red candle, because people ask all the time, red versus green. It doesn't matter what color necessarily it is. The structure of the candle matters more. So that candle tells me that we've got some buyers that stepped in, ironically, where? Right above that daily moving average. Look how pinpoint buyers stepped in right on top of that. All right. And then it's trying to get back above the daily 50. So really, QQQ breaks above 716, we can start working our way back up to 720 and then back up to 730 plus. Okay. So pretty simple chart here on Qs, in my opinion. If we can break above that level, we can start working our way back up to the upside. All right. If we fail underneath this 712 and then ultimately 710, we can probably start working our way back down into 700. Okay. So Qs are just waiting on NVIDIA to kind of choose a direction. It's waiting on data to choose a direction. As you can see, it's just pinned in the middle right here. Okay. And you can see all the mess that happens in the middle. Look at all this mess that happened right in the middle of these channels. We went up, down, up, down, up, down. It looks like a guitar string right now. It's just up and down and up and down and up and down, then back down, then all the way down here, then back up and all. This is just a pivot point. Okay. So be more neutral in here until we get a direction underneath this 708 or back above 717, 716. Okay. Break above highs, break below lows. All right. IWM. Look at the daily candle in IWM, pinpoint right on top of that daily 20 moving average. We talk about that all the time. It gets too extended above the moving average. What does it do? Pulls back down into it to ride the wave more. Okay. So IWM, because it held those moving averages, right? I project that IWM is going to try to go back higher, back above 300, maybe try to get back into this 303. Okay. So that's our channel in IWM right now, this 303 and 298. See right here, 298, 303, 298, 303. That's our channel for right now. If we get above 303, we can go higher. If we break below that 297, we can go lower. All right. So again, a little bit more neutral on IWM because it's got this tight channel, but bullish, breaks underneath, it's flip to bearish. All right. Cool. I'm going to check the chat really quick. If you have any questions, let me know down below. What would y'all like to see? If this has been good thus far, I see some fives in the chat. Thank y'all so much. We're wrapping up here in the next 10 minutes. So we've been right at an hour. Hopefully you've enjoyed this lesson today. Hopefully you've enjoyed how we get to our answers. Does this take me this long, Brian, how does this take you an hour? No. All this is going through my head within 15 minutes of me doing my analysis for the week, but I have to slow it down when I'm teaching, because we got new people. But once you start getting this information is going to start coming faster and faster to you. All right. Questions? Any stocks that you'd like me to go over? And then we'll talk a little about crypto as well. We'll get into individual stocks. Okay. All right. Let's jump into NVIDIA. Since this is the topic of the conversation tonight, what do you think is going to happen with NVIDIA? I told you, I think personally, NVIDIA is not going to miss on earnings. It's just not. It's been growing tremendously. It's just not going to miss on earnings. The key with NVIDIA is the response to their forward guidance. So what NVIDIA typically does on earnings, as you can see right here, this E down at the bottom, the last earnings they had, what did they do? They beat on earnings and then they were flat and then it dropped. And then we had that big pullback. Okay. If I go back to the last earnings as well, all the way back into February, look what I did. Ran into earnings, dropped, pullback. Right? It's just what it's been doing. So does it have to do that this time? No, not necessarily. Right? But it's just, that's been NVIDIA's kind of thing. It runs into earnings. Everyone gets their bread before earnings. It pops one time. People take their profits. So in my opinion, if NVIDIA beats on earnings, does very well, we can get back up to 225, maybe 230. And then I think personally going into September, people take profits, we pull back. All right. That's just my projection. Do I know exactly? No. Right? We talk about in our community, like how to trade these things. The gold standard of how to trade this is wait post earnings if you're trying to trade it. Okay. If you are a person that knows what you're doing and you want to have a lotto, as we call it, a strategic lotto call option or put option before earnings, you can do that. Okay. So I would say personally, don't bet against it. So if you want to put a call option in before earnings, we'll talk about that privately in our community. If you're not inside, do with it what you please. Okay. We'll look at a call option potentially going back up into this area. And then if they pop, you already know what I'm about to do. If they pop on earnings and I get a big gap fill, I'm shorting. Okay. So I love post NVIDIA earnings. It's one of my favorites to trade. If you know, you know. So we'll see. All right. What if they chop around? Right. I don't know. If they stay flat here, it's just not very good. It could go anywhere. All right. The key level on NVIDIA is going to be this 212, 213. Okay. You can see that it was once resistance and now it's support. So NVIDIA had a bunch of resistance at that 212, 213 level that it tried to break through multiple times. Bam, bam, multiple times there. And what do? We finally broke out. And what are we doing? Trying to retest to see if we can stand on that foundation. So ideally, buyers should step up there and roll it higher. All right. Kind of like what happened right here. Pull back. Bam. Right back up to 230. Okay. So that is where I get my thesis / prediction / what I think might happen with NVIDIA is we'll get back up to the 220, back up to fill this little gap fill here, 225, and maybe break into 230 plus. Okay. All right. There's my NVIDIA thesis for those that need to know that. Other top watches this week that moved well last week, we got Oracle. Oracle moved very, very well last week, and I think it's going to move based off CRM's earnings, okay? Because it's in the same sector, in the software sector. So Oracle, you can see right here, again, I have the moving averages up. And what did Oracle do? Drop below the moving averages, drop below the moving averages, drop below the moving averages. But what is it doing now? It's reclaiming these moving averages. So that is a change in direction. Look what happened right here. 144, there's the price of what it was right here in April of this year. It went from 144 all the way back to 189 and then all the way back to 250. So Oracle, in my opinion, is a great buy opportunity and also potentially trading more calls on it to the upside. All right. So this week, if Oracle gets above 150, you can take it back to close to 160. And then ultimately we're going back into the 170s and maybe, 200 is the target. 200 plus is the target. I'm just talking about smaller levels because we got to take it level to level to level. It got above the first two moving averages, trying to go to this next one, trying to go to this next one, and ultimately trying to do something like this. Okay. So I do think Oracle is a great long-term buy right here as far as risk to reward goes. And I also think it is good to trade call options on it if it gets above that 150 mark. All right. There's a plus setup for the week on Oracle. But if it switches and it pivots and we get back underneath that 138, you have to stop out or you have to kind of reassess. What I mean? If you're a visual person, if this candle flips this week and we get bam, something like that, I got to flip the sentiment because we failed that support underneath 138 and we can come all the way back down here. See that? Pop, it's going higher. Nope, drop. All right. Pop, nope, drop. Right. So I have to be prepared for that on Oracle that it needs to clear that 150 level to continue higher. All right. But it looks good right here. I'd say this is bullish to neutral. All right. Let's look at Google this week because Google and Walmart have this thing going on with tap to pay. Okay. I don't know about you, but anytime you got to go in Walmart and I'm like, are you kidding me? right? Are you kidding me? I got to pull out my wallet. I got to, that's why I was like, okay, Walmart, you're not getting my money right now. Okay. You're not getting any little small thing. I'll just order on Amazon or whatever. I'm not going in there for that. Cause if you don't have tap to pay, what are we doing? Okay. So now Walmart is potentially coming out with tap to pay, with Google tap to pay, probably Apple as well eventually. But that could be a sentiment here, as Google's been kind of pulling back and sitting at this 140 level. So if Google gets somewhat back above 350, I like it a little bit better. I just haven't been looking at Google because it's just been chopping, right? It's been pulling back and just sitting here. All right. That's not good price action to trade, just sitting, chopping for 1, 2, 3, 4, 5, 6, 7, 8 days. For a week, it's been just sitting here. So it's kind of preparing for its next move. So above 350, we can start seeing back into 360. Above 360, that to me is going to be a reversal for Google back to the upside. Okay. You can see it, what happened right here. Kind of see how it's set right in this 340, big move back above 350, starts moving and gets some buying going on. If Google somehow fails below this 340, probably coming back closer to the 330s, you can see all the way back down here, that dip right there, and it can come back down into here. All right. So Google, keep that on watch this week just to see if it has a little catalyst with Walmart. Speaking of Walmart, this is one trade that we're potentially looking at doing and getting a long dated swing call option on. Okay. I would have, here's a scenario. One of two things if we're going to do this. One, this week we get and break structure back above this 104.33. Okay. We need to break above that daily high and start changing this structure above this 104.33 and ultimately above 105. Okay. Because that would change the structure and the direction from a downtrend back to an uptrend. Okay. And for those that have watched my gap fill videos, you see this big gap that dropped from earnings, right? That would be the opportunity there all the way back up to 113 to 115 plus. Okay. So if that tap to pay thing comes out and they give some type of announcement in the next couple of weeks or whenever they do, that could be the catalyst potentially for Walmart kind of squeezing back up. Okay. So that would be my indication is we see Walmart back above 105, getting interested into call options. Now, if you want to get in early to Walmart, we can with shares and also putting more time on the contract. So in my opinion, looking at January 2027 contracts would be fairly safe in my opinion. Okay. Now, those would be the 105 calls, the 100 calls, even maybe potentially the 110 calls. Okay. You're buying safety. Now, Brian, what if I buy this and it falls lower? That's kind of my plan, right? I wanted to see Walmart personally come down underneath 100 and then reclaim. So do something like this, bam, back up above 100, but I don't always get what I want. All right. That's what I would ultimately like to see. You see how it rips down here, gets all the way down underneath 100, then bam, back above 102, and then we can rip. That's what I would like to see. Kind of the same thing here. See what Walmart does here on this pullback, pulls back a little bit lower, bam, really quick back up. That would kind of be a signal a little bit more that Walmart really wants to get back above. Let's check the moving average stack. Okay. Got to pay attention to that because I've told everyone that moving averages are very important. And if we start failing them, they can start submerging the stock lower. All right. What did Walmart do? It got underneath all these moving averages on a daily, underneath this one, underneath this one, underneath this one, and fell on earnings. So when I see that, the safest thing to do is buy shares. The best thing to do to try to get the reversal back up is try to get it back above either 107 or trying to get back above 105 to confirm it. because sometimes what can happen is it can just chop around here and then fade lower and then fade lower and then fade lower, right? We've seen that before. Okay. So I'm going to be watching it to see what it does this week, but I think it's a great opportunity for Walmart on a dip. Okay. It's also sitting on a weekly moving average here. Okay. So right on top of this weekly 100, but we are in a double top. Two tops, could not get above that 133 level. Failure. That's a change in direction. Okay. So I've got to keep that in mind when you're trying to get a big reversal out of that stock. I do not want to jump the gun and it does a Palantir and just keeps going lower and lower and lower and wants to come down to the next moving average all the way sub 100. Okay. So let's look back and see when's the last time Walmart failed underneath the weekly 20, the weekly 50, and then now we're pressing on the weekly 100. Well, that hasn't happened in a minute. Okay. Look at here what happened right there in 2022 on Walmart. Walmart fell from $50 back to 33, and it failed the 20, the 50, the 100, and fell all the way back down to the 200. So do you see the possibilities when those moving averages start moving underneath, right? It really hasn't failed underneath those moving averages for a minute. So I'm going to be very cautious on Walmart, but watching to see if it has that catalyst back up. Okay. Make sense? Okay. Cool. Sitting in a great spot. Sitting in a great spot, but buyers need to step up very quickly here. Okay. Previous highs right there. Support right here. And it's sitting right in support right here. So they need to step up quickly this week for it to hold up. Okay. Palantir. Where'd my camera go? Hey. That go away? Y'all can still hear me though. It's like, Brian, wrap this thing up, man. We're wrapping up right now. I got some questions in the chat, so. There we go. Your thoughts on the Trump's Canada tariffs and their impact on certain industries like building and construction? Yeah, my thoughts on that, Chris. If y'all didn't know that Trump is still in cahoots or talks and trying to put tariffs on Canada and various other countries as well. I kind of am more of a reactionary mode on that. If you have more information on it, Chris, I would love to hear it, obviously in our community. But to me, I'm more of in a reactionary mode. So if that comes to fruition, I do believe that we will have some type of downward turn, or we obviously products for manufacturers and obviously building, construction, things of that nature will start getting more expensive. So that will have an effect on the housing market. It will have an effect on the overall market, in my opinion. Anytime the T word is mentioned, I kind of react in accordance. So I'm more of a reactionary trader / investor. But if we can get ahead of it, as you know, then I'll take a look at that throughout the week. So that's just my open response to it off the top of my head. I'd love to hear your thoughts though, Chris. Okay, let's keep rolling through some other A+ setups this week. Robinhood here had a nice bullish move there. If Robinhood can get above that 110 mark, we can start moving our way back up potentially to 115, 116. Again, I'm watching after a big bullish move, do we need to retest that 101 before going higher? Okay, you see we broke out of structure here, pretty clean there on Robinhood. Broke out. Do we need to retest and then go? Okay, so just watch Robinhood for continuation higher, trying to get back up to that 120 level. But if it fails back underneath 100, then we got some move back down. That'll be based off of what crypto does and if there's any Clarity Act news this week. Okay, Intel, not the best move on Intel here. Intel a little bit more bearish in nature, at least for right now. It's got to hold up this 90 level. As you see, it's failing underneath 90 in the after hours. If Intel cannot hold up 90, then we're probably coming back into the low 80s. And it might get a little bit ugly on Intel because it just could not get any buying going. But I think Intel personally is still an opportunity, but it did run up very quickly. And obviously, people knew that President Trump and people were saying buy it, buy it, buy it. It was a great opportunity, but it's backed by government and also some retail and institutional buying. So it might need a deeper pullback. All right. It's kind of doing what Palantir was doing, went straight up and then slowly grinding its way lower. So I think that's still bullish personally. We just don't know where it's trying to go to. If it's trying to go all the way back down here into the 60s, okay, and then go higher, or it does a Palantir move and we rip back above 100 and we start working our way back up. Okay. We look at the daily moving average stack. You can see it's crossing that daily 50, crossing the 100 and the 20. And the next moving average is all the way back down into 71. Okay. So got to get back above some of these moving averages to really get going. But in general, I think it's more bearish in the short term, but long term, I think it's an opportunity. Amazon, pivot point is going to be this 257. Okay. Underneath 257, you see the possibilities. 257, we're going back down to 250 and potentially more. If we get back above this 263, then we can change direction and go back to 270. So I think everything's just based off NVIDIA this week. Tesla, a lot of Tesla people, a lot of Tesla bulls stepping in very quickly. We want to watch this moving average this week. You can see where Tesla moved right into, is moving right into the gap fill where it dropped off of its earnings. This is what I was talking about from Walmart. Do you see how this drop happened on earnings and then it settled in and then we got a reversal signal and then it worked its way back up? Okay. This is how Walmart would start looking if we could start getting some green candles changing direction. So there's a visual for you on how Walmart would look. Okay. So Tesla this week, I think personally, this full gap gets filled all the way back up to 273. You can see right there that gap dropped. And then ultimately that, not 273, 373. And then in my opinion, that 380 could be a possibility. All right. 380 could be our target. When we get to 380, we'll watch what happens there because we're still forming significant lower highs on a weekly. Okay. Lower high, lower high, lower high. And we're pushing back up into where? Another lower high at 380. 380 is a massive, massive level. You can see right there. You can see that used to be support. You can see the possibilities even right here around 370. 370 can go all the way back down to 280. Okay. So these are big levels that are stepping in as support. Tesla is bullish in the short term and it's working its way back up. So I would consider Tesla more so for calls, but mindful of where it's headed back into. All right. CRM, another one in the software space. This one for calls. Because above 203, you can see that big bullish move there. Same thing as Oracle and same thing as CRM. That's not CRM. This is CRM. It has earnings this week. Same thing as Oracle. Same thing as Microsoft. Same thing as ServiceNow. Above that 200 mark, trying to work its way back up. And it does have a gap fill all the way back up to that 226, 230. You can see right there. So I think earnings, if they're great, we could pop up something like this. If earnings are just superb and they just blow it out of the water, we could see it all the way back up into 270. Okay. All right. IBM, I think it's still a sleeper. IBM dropped on earnings. You can see that big earnings drop right there. Bam. It's reclaimed 218 and trying to work its way back up. IBM gets above that 242. Look for it for calls. Stays below there, I would just stay neutral in this zone. Okay, I would just stay a little bit more neutral. Kind of in that range right there. There. Breaks above, take it up, back down to 220, just in a range. Okay, what else we got? Apple. Apple's a little funky because Apple looked like it was bullish, and now that's not the best looking weekly candle on Apple. So Apple, I think, is going to be very important going into NVIDIA earnings, but also Apple gets back above that 320 is going to be your mark. All right, so Apple trying to base here. If we get a big move on Apple above 320, take it up for calls. I'd stay a little bit more neutral underneath 320. You can see that big wick right there. You can see right at 300. So we're in a range between 317 and 300 on Apple. Okay. Now, I like Apple long-term, obviously, especially going into the September event. Think about Apple going into all the new announcements of their releases, the new iPhone 18, the flip phone, the new MacBook. I think Apple is a great buy down here underneath 300 or around 300. I think Apple could just take off into that event, and then we're back up here on Apple. Okay. So keep that in mind going into September, that Apple release event. If we drop more, I think it'll be a great opportunity for Apple calls or more shares on Apple. Okay. All right, let's look at crypto really quick. Bitcoin. All right, we talked about this, that it is approaching a massive, massive, massive level here on Bitcoin. So this is going to be our telltale on Bitcoin the next couple of weeks. Do you see that 50 moving average on a weekly? We talked about this for the last year, year and a half. When it falls underneath that 50 moving average, we're going lower. Okay. If it gets back above that 50 moving average, which in my opinion would be right around 83,000, if we get above there and the Clarity Act sends us, I think we're going straight to 100 plus. Okay. And there was the dip. No doubt about it. Now, if we cannot get above that level, we can start chopping around in here again. And if we get another dip, that's a gift, like I keep saying. That's a gift of a dip to buy. Okay. But this is all accumulation right now. Again, you see what happened right here? It started working its way back up into that weekly 50. This is back in 2022. We got underneath it, started working our way back up, and then we could not get back above and we went lower. Okay. Am I projecting it to be the same way this time? No, but it's just a guide that I can use to say, is this the real dip? I think it's a great buy. Right. So shout out to everybody that bought Connell shares. They're up 100% from when we mentioned it multiple stock sermon Sundays. Connell is our leveraged ETF of Coinbase. Okay. We bought it roughly at 3 and some change. Some people bought it at 4. Some people bought it at 5, and it went up to 6. That's 100% on your money, roughly 80 to 100%, depending on where you bought it. Okay. So I would love a pullback. I know some people probably took some profits. Some people are holding. Some people, if it drops lower, they're buying more. So what I would love to see is the market drop one more time. It pulls back again, gives us another opportunity, and we rip it back higher. Okay. But our goal or target on Connell is well above $10. Okay. I'm talking about, this is somewhat of and again, not financial advice, do your own due diligence, but this is like a 1 to 2 year plus play. Okay. If you go all the way back in the charts, you can see here, back when we had the crypto dip in 2022, it went from 3 to 17. And then over a 2 year span, it went back to $87, $3 to $87. So if you had 1,000 shares at $4, you spent $4,000. You held it for 2 to 3 years. Again, not financial advice. If you come back to this video, if you held that in 2022 and you had $4,000 into it, you bought 1,000 shares and you held it for 2 years, $78,000. I'll just leave that there. Okay. Cool. I don't know what's going on with the camera, but y'all got to see my face before I leave. I thought the 50% took effect on Saturday, and Canada are responding with their tariffs starting September 8th. Yes. I just looked that up, Chris. You're absolutely correct. That's why I wanted you to update in the chat, because I just looked that up as you said it. But I was just finishing my thought. So yes, you are absolutely correct. Cool. There we go. My face is back up. We're done. Thank y'all so much for tapping in with me. A little bit longer video, about an hour and some change, but you're so welcome. If y'all got some value from this, give me a like, subscribe. If this was even a little bit valuable, just think about what we do inside of our community. What do I do on a daily basis? What our clients and members are doing, and also what I do with one-on-one mentorship. All right. Peace, love, and blessings. You have a blessed one. Thank y'all so much. You have a great night. I'll see y'all first thing in the morning.